Hi, this is Luann Shikasho. Welcome back to my YouTube channel, and today we're going to talk a little bit about COVID-19 and how it's affecting business.
So Luann,
Yes, sir.
what does all this craziness in COVID-19 mean for real estate? I mean, are people buying and selling? What's going on?
Well, there's a lot of unknowns out there, but at this point, we are still open for business. And in fact, today we are putting 3 new escrows into play. So we are trying to maintain calm and conduct business as usual.
Wow, that's interesting. So it's all the craziness and wildness is not slowing down people selling and buying at all.
People that need to buy and sell are still out there. We are taking extra precautions, hand sanitizers, the whole wiping everything down. And fortunately, all of my listings actually from the get-go have had virtual tours. So people can visit my listings online and kind of get a feel for what they look like walking through with the videographer.
That's good. So for people that don't want to go into homes right now, they can get a good snapshot of the home through the video.
For my listings, yes.
Yeah, awesome.
I think it's going to become more prevalent as this continues.
Right. Okay. Do you hear anything on the lending side from your clients?
Yes. With everything that's going on with the feds, they're very concerned about when am I going to get a free mortgage with no interest rate?
Oh, that's right. Well, we know that the Fed cut their fund rate 100 basis point. And I immediately started getting calls because the Fed fund rate is effectively 0. So the most common question I get is, will my interest rate be 0?
Right.
And just to explain what the Fed fund rate is, that has no direct correlation with mortgage rates. Mortgage rates are based on bonds, mortgage-backed securities. The Fed fund rate does kind of affect the market, and we can get an idea of what's going to happen to mortgage rates. But just because the Fed cut their rate doesn't mean mortgage rates are going down.
Boo.
I know.
Sorry.
But on Sunday night, when the Fed made their decision, something else happened that kind of skirted all the news, and no one paid attention to it, but it absolutely affects mortgages. And what that is the Fed said that they're going to inject $700 billion with a B,
Yes.
into quantitative easing.
Yep.
And if that sounds familiar,
Yes.
that's what happened in 2006, 7, and 8 to get us out of our Great Recession. And part of that $700 billion is going to go towards buying mortgage-backed securities. So the government's going to buy mortgages again, and what we know is when they do that, mortgage rates generally go down. So the story for me, and what I'm telling my clients is, especially if you want to refinance, we know mortgage rates are low right now, but don't panic. They will probably stay low. They might even get lower, and there's no rush to make sure that you refinance because there's a lot more important things right now to take care of your family and yourself and your health. You should be able to refinance. You should be able to get a better rate, but you don't have to do it today.
But what I've heard is if you want to refi, you should start the process so that your trusted lender can push the button at the right moment.
Absolutely. So most banks are out of capacity and having a capacity issue because there's so many people wanting to refinance. So refinances are taking a long time. Now, let's get it straight. Purchase rates are still low.
Yeah.
Refinance rates are low, but they will fluctuate. It's very, very volatile. And so, like Luann said, you're a genius. Get your applications in now because it's going to take a while to process. And you want to be ready when rates fall so you can lock.
Thank you for watching my YouTube video today. Stay tuned. We will be continually updating you on what is going on in this real estate market during these turbulent times.
My name is Danny Kwon. I'm with Premier Lending. You can visit me at bnkr.loan. That's banker.loan.
And I'm Luann Shikasho. Thank you so much for watching.